Now, I talk about something in my videos, especially the last 2 weeks. The post-election sigh of relief is... So let me back up. What is the put call ratio? Put call ratio is the balance between the demand for puts, the demand for calls. If this number is going higher, if this index that we are looking at here goes higher, it's telling you the demand for puts is outweighing dramatically the demand for calls. If this thing goes low, it's telling you that calls are greatly out in way more demand than puts. Right now we see puts are in high demand. Why would puts be in high demand right before the election? Market is buying puts. That is correct, right? People are buying puts right now. Now, before you get all conspiratorial on me, I don't know if that's a word, this is very practical, okay? Because what this just tells you is that people are using the options market for its intended purposes, likely. I'm going to go out on a whim and say that this is not people saying the market is going to crash. I think what this is telling you is that the market is saying, I want to buy some protection, right? So let's say you have a $1 million stock portfolio and you say, I don't know about all this Trump, Harris, stuff. I need to take a bet. I'm going to put down a $20,000 hedge. So you go out and you spend $20,000 on puts, right? Well, what does this do for you? If the market goes up, you just lose your 20K. But if the market goes down, if there's a big sell-off, if there's uncertainty about a peaceful passive power, if there is a reaction to a certain president that causes the market to slide sharply, these puts that you spent $20,000 on, right, could be worth $100,000. They could be worth $150,000 very quickly. So what we see here today, guys, and this is very, very important, and I hope this is why you watch the show, is I'm trying to uncover, I'm trying to lift stones so we can see what's under the stones, right? I'm uncovering secrets for you here. This is not really a quote unquote secret, but it's important that you recognize what's happening here. The market is buying protection. The market is uncertain. The market is fearful. And in my personal opinion, it's an opportunity. Now, I am going to say this clearly. Be very careful trading in the next few weeks, because what this is telling you is there's also a very high expectation for volatility. Things could move massively in the next few weeks. You could see gold down dramatically. You could see, gold up a ton. You could see stocks dropping out of the sky. You could see stocks ripping higher, right? The point is the expected move in the markets is being told to you by the options market. The options market is saying, we think there's a big move coming, one way or the other. Now, this is not saying, again, before you put your tinfoil hat on, extreme demand for put does not always mean the market thinks it doesn't mean the options market thinks the market's going to crash. That's not necessarily what's happening here. As I said, if you have a $1 million portfolio and you want to hedge it with $20,000 puts, you could potentially hedge your scenario so that if the stock market drops, your puts go up in value to protect your portfolio.
This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The stock box, the edge finder, pulver alerts, and the VIP Discord community, as well as our trading view indicators, are all on sale for 40% off. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more with the link being dropped in the chat now. Again, 40% won't last forever, so take advantage of this huge sale. Stockbox, Edge Finder, Pulver Alerts, VIP Discord community, and Trading View indicators, 40% off right now.
You know, stocks going into Q4, right, is the Q4 seasonal trend. This is something that we've observed. It is not a opinion. It is not a hopeful wishful thinking. This is statistically something that most years, not every year, but most year happens. We have a bump in the NASDAQ and the S&P 500 in the fourth quarter, right? This is not something that, again, I'm not guessing this. I'm not wishful thinking. I'm telling you that if we observe the historical price performance of the NASDAQ, of the S&P 500 in Q4, this is an observable trend. Last year, this was the most profitable period of the year because I was very bullish on stocks during this time, and it was one of the best things that I did all year long. How did I come to that conclusion? Software. The power of software is it can help you uncover important things that if you're only looking at a technical chart, you can completely miss. The tool, in my opinion, with the right risk management, with the right approach, and with, you know, somebody who has some experience in this stuff, pays for itself 10 times over. Now, again, it's not going to tell you what to do and make you a rich trader without any experience or effort. We would never claim that. This is not a magic formula tool. It is simply something that allows you to take a more comprehensive view of the markets to make more informed decisions on the trades that you're thinking about taking. So don't miss it. Again, it is our biggest sale of the year. We're doing 45% off during this live stream. So if that's something you're interested, we'll drop the link one last time here so you can get the biggest discount of the year. Okay, so NASDAQ is up about 0.66%. You know, I'm going to be doing some stuff here today on the stream later. Again, I just want to do a quick plug too. Later, we will be streaming at 7 p.m. Eastern time the event itself, as some of the votes get tallied up, as we get into, you know, the presidential election stuff. I'll be there with you the whole day to go through some of that stuff live on camera. We'll be taking a look at sectors. We'll look at commodities, gold, silver, oil. All that stuff is going to happen this evening. So if you are not already, subscribe to the channel. Subscribe, number one. But number two, turn on post notifications so you get notified when we go live. The live stream will be taking place at 7 p.m. U.S. Eastern time. Some of you guys, it'll be real late in the evening, but if you want to stay up, you know, pour yourself some coffee, sit back in your chair, hang out with Uncle Nick. I'll take care of you. It's going to be a great time. See you guys there. Okay, so sectors wise, we got XLV. This is the healthcare sector. Coming down here recently. I'm curious about that. It's a sector I like. Basic materials pulling back. Staples also pulling back. Real estate, you know, I've been flat on this position. I actually had a really good initial move on this trade. It's come back since to where I've initially bought it. So I'm flat on this one. Take a look at XLU. This is the the utilities sector. Has been pulling back here recently. This one's very rate sensitive. So is real estate. These two are very rate sensitive things. If you think rates are going to come down, healthcare, real estate, utilities, technology, some of the more sensitive areas to it could see a serious move. I am long semiconductors, which is a high risk, high reward trade. Part of the reason, I'll say this, part of the reason I like semiconductors is because it is a bipartisan thing that the U.S. continues to lead the way with the semiconductors and AI trade. It is imperative to the next chapter of global financial markets that the U.S. takes the charge higher, and both Democrats and Republicans agree on this. They don't agree on everything. I don't even know what they do agree on, but this is one of them. The AI trade is very important. So this is part of the reason why I like semiconductors. I'm not telling you to go buy them because they're super high risk. They could drop massively and I could lose a little bit of money here. Now, I want to preface this. I'm not risking my whole account on this trade. I work with a larger capital basis. You should do your own due diligence, do your own homework. You probably shouldn't trade at all today. I'm not here to tell you what to take trades on. I'm here to do what I'm doing and share my opinions on it. But I like semiconductors as a space, for better or for worse. That could get crushed today, or it could do really well. But I just want to preface that I do think that this is a bipartisan area of the market that I like. It has massive growth. It is high risk, high reward. And I have a stop loss in the trade. So if this thing gets crushed, right? If the Fed comes out and kills the party, or maybe the market doesn't like something with the election, semiconductors could have a substantial drawdown or a substantial sell-off. I've got a stop loss on the trade. I know what I'm going to do if I'm wrong, and I will admit when I'm wrong. And it's really important as traders that we do that. One of the biggest mistakes traders can do is never admit they're wrong and then just get crushed by some bad position, right? So I'll admit if I'm wrong on this one, and I know where I'm going to admit that because I've got a stop loss placed on my trade to mark that level on my chart clearly, okay? Just wanted to highlight that. I'm also long the NASDAQ. This is a trade that I shared in the VIP room. All of the trades that I'm taking are shared in our Discord, by the way. That is also 40% off for our Black Friday sale. We'll do 45% off if you send us a direct message while we are live streaming this morning. So silver's another one, came down to a key level of support here. We'll see how this if this can continue to react positively. I'm a little cautious on the metals, guys, because again, once you get past the election uncertainty, just like the put call ratio is telling you again that the market is positioned for, it's paying for insurance right now. Gold is also insurance for a lot of investors, a lot of traders. Gold is an insurance policy. People buy it as a uncorrelated bet to the stock market, or perhaps a asymmetrical potential return in the event that you get some sort of global crisis, right? Gold plays that role for many investors. That being said, when this presidential stuff passes, in my opinion, is we will probably have a good idea of the president, and I'm fingers crossed, hoping for democracy, that there's a relatively peaceful passive power one way or the other, because we know we're going to get a new president, even though one is the standing VP. We know there's going to be a new president here. Both we've seen in office, but one is either going to return or one is going to stay in office but get a promotion, right? So we'll see how that plays out. But my opinion here on gold is that once you get that premium that gold is collecting currently for the uncertainty of that event, once the uncertainties become known facts, gold, I think, potentially rolls over. And I'm not calling for a big short, of gold or a big crash of gold. I'm just saying I don't love the idea. I am bullish, but not up here. I like the idea of buying gold if we get pullbacks and we get potentially some economic data starting to cool off. Yeah, I like gold and potentially on the long side, but at current levels, I just have no trades, and I don't really want to go into, the election betting that we're going to get some crisis of an event, which would make gold skyrocket, but it's not something that I really see. And again, I'm not a doomsdayer on this topic. I'm thinking that likely we'll get a presidential candidate become the president that will pass, and let's just hope for the best on that front. The bigger question is, in the next few months, if you get a change in leadership, what happens in some of the foreign affairs, right? What happens in the Middle East? What happens in Ukraine and Russia? Those are question marks that potentially could mean gold continues to go higher. Now, somebody pointed out to me that gold on the election of Trump last time got sold heavily. I looked at the chart. I went back to 2016, around the time of Donald Trump getting elected back then. And you can actually see there is some validity to that. Here is the November period in the previous, when Donald Trump became the president. You can see there was a big drop off in gold, but it was temporary. There was a rebound in gold prices. They went sideways, and then ultimately in 2019 and 2020, they ramped. So, for me, I'm not really seeing a huge catalyst for downside. Perhaps maybe there's another, if Trump were to win, a downside move in the short run for gold. Same thing for, Kamala Harris. I think that just the uncertainty of the presidential election being behind us, and that uncertainty becoming, sort of known facts, I do think that causes gold's price to potentially have a short move down, but not necessarily a lasting massive affect one way or the other. In fact, I think that here's my scenario for if Donald Trump gets elected into presidency. I think you probably see a short run move to the downside, and then gold kind of continues what it's been doing, irregardless of who the president is. I think there's bigger forces at play. It has a lot to do with the Fed, has a lot to do with international sort of affairs, things like that.
As we go into the elections, we currently have a very bullish yen, actually. Very bearish yen, very bullish aspect on the yen pairs. So we've got Euro yen, Australian dollar yen, New Zealand dollar yen, Swiss yen, and pound yen, all reading bullish. We've got the CAD Swiss bearish. The Nikkei's been in the same place for quite a while. It's still reading bullish, not overwhelming. We've got the FTSE bullish as well. Although the FTSE is a bit pants. It's one of the worst assets. So couldn't care less what's going on there, to be honest. Is there any site with live voting situation? I don't think so. The closest you would be able to get, I think, is Polymarket. I think it's a crypto betting website that you can bet on the elections, but I think that's really as close as you can get. Phantom, good to see you. Phantom, are you the same guy that's in the Discord? I'm not sure. I keep seeing your name popping up. I'm not sure if he's the same guy or you're a different person. Just before we go further in, an update on the portfolio. So we managed to recoup, obviously, the drawdown that I had during this period. So now up 2.4% this month. So in the first 4 days, I've not traded today. I've got a position out here open on Ethereum, 1.69 last month and 2.3 the month before that. So it seems like I'm going to close out the year relatively nicely if we can stay on the track. Politico has a live map that is filling out. Interesting. Okay. Is trading the election risky? Yes, I'll go into election trading in a second. Hello, James. Hello. Phantom, it is you. Good to see you. Dup that thing. Hello, James. Short, sitting on my hands. Good stuff. So the reason that trading the day of elections is risky is not necessarily because we're going to get huge spikes, which definitely could happen. But the main reason that trading elections is just a bad idea in general is because of the sort of volatility in the market. It can spike heavily. So, for example, if you are sat at JP Morgan now, you're not going to be putting millions or tens or hundreds of millions into positions right before the election. If anything, you're going to be profit taking. You'll be sat doing research for the future. You won't be opening positions right now. So there'll be a lack of liquidity going into the markets. And again, if anything, it will be mainly profit taking. The banks will also be filling orders for clients. But again, that's not really enough. That'll be more of a 1 minute time frame type of thing. So again, it's not the wisest idea because let's say you can sit in a trade, it might just range for the next couple of hours. And then the election comes out, let's say Trump wins, the dollar goes in a rocket ship and you've just been shorting it because of a technical setup. So yeah, it's kind of gambling, I would say, just because we don't have a full view of really what's going to happen. Again, my portfolio is completely flat except a position trade I've got here on Ethereum. This is a weekly time frame. I'm planning to hold this for quite a while, although the swaps are already eating me alive. So actually I might close out of this one. We've got, I think, increase in swaps on Wednesday, so yeah, I might not hold this one. James, what's your YouTube channel? It's just my name. Search in Forex James, you'll find me. I don't really post too much there. I post a weekly watch list and things, but I'm not as active on YouTube as Nick is. Something I want to do, but it's difficult. It's time consuming. Stockbox has insider trades. Yeah, I need to get the Stockbox before the Black Friday discounts over. I wonder if I can use my own discount code for Stockbox. There you go, guys. If you want even more, if you want an even bigger discount on the Edge Finder, I think it works on Stockbox as well. You can use code ELITE. It's 45% rather than the standard 40%. I've got the plug. Oh, I am the plug, I guess. Why are there an increase in swaps on Wednesdays? I'll be honest, Laura, off the top of my head, I actually can't remember. Let me just double check this for you so I don't give you false information. Financing charges are tripled on Wednesday night. Adjustments. Sorry, hold on. This adjustment accounts for weekend when no swap rates are applied. There you go. That's right. So essentially, when you hold over Saturday, Sunday night, you obviously aren't paying swaps because markets are closed. So Wednesday makes up for those swap fees. Euro Australian. Actually, there's a little bit of juice with Euro Australian. Now, unfortunately, I can't show you my source, so you're going to have to just take my word for this. But let me just double check who it was before I go in. It's Morgan Stanley is currently in a short position on the Euro Australian. So let me just take the stop loss here. So their stop loss is at 1.68. 1.68. Take profit is at 1.525, and their entry is quite high, I think, as well. Let's see here. 16372. There you go. So that's a position that Morgan Stanley is in right now. I was looking at this. I was very tempted to just follow in their footsteps and take a short position. But as always, being the due diligent trader that I am, I had to go and check out the Edge Finder. So if we have a look and see what's going on here. Actually, let's first check COT. So Australian dollar, actually kind of flat, decrease on longs and shorts, nothing interesting. The euro actually had a large increase in short positions, or short contracts, I should say. So that's decent. So that's one factor. But again, I looked at the overview for Euro Australian here. Seasonality is bearish. Retail is short. Oh, actually, maybe I was looking at outdated information. Actually, it doesn't seem too bad. The only thing really is that it's got a score of 1. It's not really a bearish score or bullish. It is sat at neutral. So for me, it's not quite there in terms of being ready to enter. So if we can get possibly a weekly candle bearish close, I might consider it. But again, not going into the election. Not wanting to trade as we go into the election. Will gold consolidate in 2025? I'll tell you what, Gold Trader Pro, why don't you tell me if you're a Gold Trader Pro? Or if you really want me to, I'll call up the Middle Eastern guys and tell them that Gold Trader Pro wants to know what's going to go on. I'm joking, of course. I don't know. It depends. We'll have to see what happens. Really can't answer what gold will do for the whole of the year. Why Wednesday though? Of all the days or weeks, I don't know. I guess some old white man decided it was going to be Wednesdays, and everyone just went with it. Pound CAD looks interesting for shorts. I would short if it wasn't the election. Pound CAD, let's see. Last time I checked, it looked quite good to go long, but I haven't really checked since. For me, there's nothing here. The H1 is just ranging. Daily isn't really doing too much. Is also essentially just ranging with a slight move to the upside. Weekly is also in a range. Even the H4, there's nothing really there. Maybe catch these sort of moving average pullbacks through here. But yeah, other than that, I don't see any sort of setup here at all.
We've got PMI numbers here coming out in just about 30 seconds that I wanted to just react to. This is, of course, services PMI, which is actually quite important. It's a large component of the U.S. economy. We're a very services-based economy. So we got our breaking news coming in here right now. Got everything pulled up for us here. Stocks on the left, gold, silver, dollar, oil. Stocks initially higher here on the services. Gold down a little bit. I don't know how much this matters today, simply because of how much there is going on. But last time it was a big beat for services PMI. Let's see if we can get a forecast. Look at that, 56. My goodness.
Oh, wow. Nice.
Services PMI did not miss yet again. Actually, that's another strong beat. yet again, another, last time around, James, we had a 54.9 reading. I think the forecasts were like 51. So 53.8, we were expected to drop a little bit. We actually bumped up higher yet again. That is a strong indication of, U.S. economy outlook being positive here, which is, real interesting. So we've got stocks and NASDAQ, in specifically not moving too much off of that. That's putting a little bit of a dampening move on the gold market here this morning. Same thing with silver. Oil staying strong on that. Dollar index, a little bit of a bump on the hourly chart. So, still, I think that the market yields today to the election story, what's going on there, as well as the Fed. But again, more signs of, U.S. economic resilience is going to keep the dollar, relatively stable, but specifically might continue to keep stocks on the northward bound, if you will, when you get those numbers. So just wanted to jump in there and share that here. What are your thoughts on everything here, James?
Yeah, the US is looking okay. I mean, the only sort of headwind for me was the NFP release. Obviously, unemployment stayed as it was. We've just had services PMI come out quite positive. So overall, the US dollar is looking quite attractive, but we'll have to see. Obviously, after the election, that is the the key thing at the moment. But yeah, I mean, separating the election for this statement, I think the US dollar does look quite attractive. The data is definitely supportive.
You've got a move here of 1% up on the NASDAQ here today. S&P's up 0.75%. Russell up 0.75%. Dow Jones 0.5%. I mean, the question is, James, I was just discussing shortly before you came on. I know a lot of traders here are very fixated on their gold trading stuff. The big question for me is that when Trump got elected the first time, the gold market shot lower. I didn't check the last time around when Biden got elected, but I do think that there's a bit of a premium here in the price of gold. I've discussed this a lot. That could come out of gold on the uncertainty becoming known, right? That idea that when you don't know who the president is, people buy gold in anticipation. They buy puts as protection in their stock market portfolios. And then when that becomes known, it may sort of work the inverse direction, right? Do you think there's any of that going on?
Yeah, I mean, I think the way I see it, it depends on investor sentiment. Well, obviously, but if we look really at what Trump is known for, well, it's first of all, he's a businessman. But if you look at a lot of his statements over the past sort of couple of years, it's Russia wouldn't have invaded Ukraine if I was in power. Putin would listen to me. Iran wouldn't have had the funds to do what they've done if I was still in power. Or he's got this thing about peacekeeping, essentially. Now, whether he actually does it or not, I don't know. But if it's perceived that he does get into power and it's perceived that he could go and fix these issues, that's a couple of things off the scorecard for gold. If the election's done and it's a better sentiment around global tensions, which obviously could then start decreasing some of the investor appetite for gold. So it's definitely something to keep in mind as far as I'm concerned. Yeah,
no, that's fair. The question too becomes, I think, with both of these candidates, spending, and I've talked about this a lot, regardless of today, whether or not we get looks like a Trump campaign win or looks like a Kamala Harris win. Regardless of that, look at yields. Yields are just continuing to skyrocket here. And I think that this is just the bond market saying, look, both of these, we've seen both of these in positions of power, both of these candidates in positions of power. They both spend a lot of money. And that is making bond participants say, I need more on my bond for me to buy it, right? More yield on the bond. That's how bonds trade, guys, where it's an auction house. Think of that. Bond investors are accepting or denying the current yields offered. So if you were to go sign up for a 10-year treasury bond, you're going to get 4.35%, let's call it. Some investors, clearly the market said we're not comfortable down in these areas because things might be inflationary, right? We're going to erode some of those gains we would have made on those coupons from the bonds because inflation may not be going away. Both presidential candidates have a track record of spending a lot of money that is potentially inflationary. So it seems like the bond market is saying that. Whether that trade, continues, if you get a Trump victory, many of his critics and people who are uncertain about what his policies could do are challenging the idea of the tariffs potentially being inflationary as well. If you get tariffs and they're very inflationary to the story, yields could also balloon higher, and that causes a potential question mark for the stock market. That being said, I'm not all negative here. There's also the positive scenario of less regulation allowing U.S. businesses to innovate and grow faster. So there's a bit of a nuance here, right? And I think that's why, when we pull up that put call ratio that I keep referencing, that's why we see uncertainty here. People are not really sure what we're going to get from which president. And, the tariffs thing is a question mark, right? Sometimes economists are wrong. Clearly in 2023, economists were forecasting almost a 100% chance that we would get a recession this year, that year. We did not get a recession, and we also didn't get a recession in 2024. So that uncertainty, that unknown, is why there's volatility in the markets at all.
Yeah, absolutely. Yeah, I agree. I think the worst time to be in the markets is when there's uncertainty. You need to have clear sentiment from investors, or larger market participants to obviously drive the trades that we piggyback on. And if we don't have that, then it's kind of a bloodbath, really, especially for the smaller retails that rely on that sentiment to drive the trends.
Yeah, exactly. So it's an interesting time. We'll have to see. Oil prices are up by 0.65 here this morning. Copper commodities in general catching a little bit of a bid this morning. Bitcoin up 2.6%, Ethereum up 2.1%, Euros up a little bit, pounds up a little bit. Seems like a little bit of dollar weakness here this morning, which surprised me a little bit with yields up so much, right? You got 10-year yield up 1.6% here this morning. So quite the moves here across the board as we count down the hours.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.